Okay, so I ran across this little article here, and I thought it was pretty funny for the media to even refer to these people as doomsday investors. I mean, isn't that like kind of an oxymoron? Doomsday investors. It seems like an oxymoron to me, right? Investing is a process. It's a long-term process of capitalizing on profitable operations, growth in profits. Doomsday is demise. So it's more like doomsday speculators, I think, is a more appropriate term. Anyway, so I went through this and saw some stupid fund is, basically hoodwinking people. They're cashing in on the whole doomsday scare tactic thing. And, I'm surprised actually Peter Schiff hasn't created a doomsday fund himself. I guess a lot of his investments, though, have turned out to be doomsday in terms of performance. You can verify that for yourself. Anyway, I just kind of noticed it's funny here to see this universe fund. And one of the fund's advisor is so-called economist and former derivative trader Nassim Taleb. By the way, so this individual, I've never spoken about this individual publicly, but it's pretty obvious to me. Well, of course, you can tell by the name he is of Middle Eastern descent. However, that does not mean that he is necessarily a Muslim or a Christian Arab. My guess is that he is Jewish. And the reason why is because he gets so much attention. And I've noticed that someone who gets an excessive amount of attention is most likely Jewish or somehow connected to Jews. And that's just what I've learned. So I wouldn't be surprised at all if he were Jewish or had some very strong ties to Jews in some way. Nevertheless, this guy's a clown. Okay, you can read his books and think, oh, this is great, and gosh, everyone is talking about his books are so great. That doesn't matter. People talk about a lot of people's books. Typically, the guys that write all these books use their ghost authors and professional publishers and so forth. The bottom line is, do they know how to make money, right? This Taleb guy is a clown. He doesn't know how to make money. That's pretty obvious. He's another one of these professional authors. Michael Lewis, another clown, professional author. There's also Jim Collins, a guy that wrote this book, 10 years ago or so, called Good to Great, talking about how companies are great, what makes them, what differentiates them. Of course, you had a few of these top 10 so-called great companies that blew up. Citigroup, I think maybe Fannie Mae or something like that. So, it's just, if you want to learn how to invest, stay away from these stupid books. First of all, any book that's a New York Times bestseller, nonfiction, is going to be garbage. You're not going to learn crap. It's going to sound good. It's going to read good. You're going to be convinced. These are psychological plays, okay? I can tell you right now. And if you don't believe me, then ask yourself why these so-called top investment books, which are read by the masses, why the masses continue to do poorly in investments, right? Differentiate between a book that reads good, makes you feel good, makes you feel like they know what's going on, and a book that makes you money. It's so rare to find a book that has any value. It's very rare. What I have noticed is that the books that are the best are the books you've never heard of. Many people haven't read them. I guess probably because those are the higher level books. And the higher the level of the book, the more unique the information is. That is to say, the most common books, the most commonly read books, typically present the most generic information. But anyway, this is kind of a marketing pitch. And honestly, this is fraud, in my opinion. The SEC needs to get involved. Let's read here. In 2008, when the S&P 500 dropped nearly 40%, Universal generated returns of more than 115% for investors, according to a source familiar with the fund's performance. That doesn't sound too credible to me. Second of all, we need to ask the question of how much did it cost for staying in that fund? In other words, that's assuming that you got into the fund right when the collapse occurred. What's the cost of doing this? For instance, during that period, things didn't just fall off a cliff, right? It was pretty much common knowledge that things were really bad. So the cost for this protection was, I can guarantee you, very high and continuing to rise by the day. So it does not factor in the cost of this, the net gains, and it also does not factor in a reasonable position, how much that would have cost. So this is a con job. I want to encourage everyone to stay away from this garbage. The media is completely irresponsible. Oh, and by the way, it's kind of funny down here below. Related, Dr. Doom says buy stocks while you still can. Okay. The other day, he was talking about a big crash. Of course, he's been talking about a big crash now for how many years? These guys are clowns. Please stay away from the media. They're criminal. They're full of shit. You will never find any real experts in the media. That is a fact. Real experts are not in the media. The media is bought off by those who buy the advertisements from the media. Wall Street, insurance companies, mutual fund companies, precious metals dealers. The more the media can confuse its audience, misguide its audience, the more its advertisers can make money off its audience. An informed audience is not a good customer for those who buy the advertisements. Wall Street, insurance companies, mutual funds, precious metals dealers. You understand how it works. If the media informs its audience, then these industries, these firms are not going to spend billions of dollars in advertisements. They need a return on their investment. And that's why the media dumbs down its audience using con men, idiots, hacks, and false heroes.